Welcome back to my world of stocks and welcome to my stock market weekly recap for the first full week of September that we just wrapped up. In today's video, we're going to look at how the stock market performed this past week. We'll talk about any news that affected the market either, positively or negatively, and we'll also finish up the video with a quick rundown of some of the biggest gainers and losers when looking at individual stocks in the market. Should be a lot of fun. I hope you guys enjoy it. And by the way, I put chapters for you down below on the time bar in case you want to skip around to any specific part of the video. But with that said, let's go ahead and jump into this. Alright guys, so starting first here with the markets, I like to just take a quick glimpse of the three major indexes to see how we performed this past week. And overall, it was actually a nice little rebound that snapped a 3-week losing streak for the market, with the Dow Jones recovering a little over 2.6%, but is still down over 11% year to date and more than 13% from its highs. The S&P 500 climbed more during the week at a positive 3.6% gain, but is also down year to date by nearly 15% and even more than that from its highs. And then the tech-heavy Nasdaq climbed the most at over a 4% gain for the week, but is also suffering the biggest losses overall out of the three, with still over a 22% decline year to date and has already lost more than a quarter of its entire value just, this past year. So overall, still seeing some huge declines in the market, and of course the Nasdaq is performing the worst out of the bunch in its own kind of, literal bear market that it's dealing with due to inflation and rising interest rates that tend to destroy highly valued tech stocks, which of course do make up a lot of the Nasdaq. Speaking of those macroeconomic issues though, let's move on now to any market news affecting stocks. And like we just saw, this past week was a nice little rebound. So what exactly caused that? Well, I think a small part of it was due to the 3 weeks prior all being negative, with the last one in specific being almost identical to this week, except it was to the downside. So we went into an extended Labor Day weekend, and I think investors got to relax a little after so much pessimism, after so much selling in the market, and all of that, negativity being priced in. And then everything just kind of rallied right after, which, as stupid as that sounds, I've actually seen it happen many times where the market has, horrible performance, but then you see a little bit of a break from trading. It gives investors some time to calm down and stop panicking so much, and then they look for any kind of reason to rally off of that or to buy stocks. So on Tuesday, you can see that we had that lull day where everything was flat and kind of looked like, we might have reached a bottom on prices. And then on Wednesday, a rally started to build up to take advantage of the low prices. I'm not saying that's an actual bottom, by the way. I'm just saying that it's sort of kind of felt like a temporary bottom this past week. More specifically, though, I think investors were just looking for any kind of positive news to grab onto and rally off of. And there were a couple of things that came out, but I feel that they were really a mixed bag. But when you look at it here, there was some optimism on inflation because oil prices reached their lowest levels since Russia invaded Ukraine, which has definitely been a large contributor to our rising inflation. Record high gas prices, things like that have been fueling our high inflation. However, the reason for that drop in oil prices is not necessarily good, since it's likely due to rising fears of a recession, which would lower demand for oil. Now, yes, lowering demand is good for inflation, but in this particular case, it's based on a weakening economy. So, take that how you will. The broader economy also received a mixed bag of news, though, from the Federal Reserve that the market seemed to like more than it hated, as the vice chair said that they will continue to do everything necessary to combat inflation, which, of course, means that they're going to raise interest rates at a high rate, even if it hurts consumers or the economy in the short term, because they really just want to combat inflation over the long term. But she also added that she still believes the US can actually avoid a recession altogether if they raise rates at a reasonable pace and don't overdo it, which the market seemed to like that. So overall, I think we just had too much selling in prior weeks and the market was ready for any kind of rebound. I think it was looking for any reason to rally. And so it took a mixed bag of updates on the economy and said, look, that's good enough. Let's rally with this. I actually think a lot of the updates and news that came out this week was fairly negative, but it seemed to be good enough for the market. There was too much selling going into it and it wanted to rebound a little. And I think that's what we saw this past week. Going forward though, I think we'll continue to see extreme volatility. You're just going to have to get used to that. The macroeconomy is in pretty bad shape right now, but I don't personally mind the volatility because I think that's when you see some of the best buying opportunities open up for individual stocks. And I think going forward, we will see some times where the market sells off a lot. We'll see some rebounds like we had this past week, but overall, just kind of volatile times. You'll have to navigate your way through it. And like I said, I think it's going to be opening up some good buying opportunities for individual stocks. Speaking of which, let's go ahead and wrap up the video now by taking a quick look at some of the biggest gainers and losers in individual stocks, and then we'll finish up the video. Okay, now starting with the gainers first, I like to look specifically at large cap stocks because those tend to be the most popular and that have the greatest influence on the market. But I'll just quickly show you the entire market just in case you're curious. I'll show you that first, and then we'll move on to large cap stocks. But not really anything crazy here. I mean, you had Amara. They saw the biggest gains at over 88% for the week. That's just a speculative pharmaceutical stock that I believe this past week they sold part of their business, so the market reacted well to it. And then if you notice Digital Media Solutions there, they gained over 72% for the week. That's a kind of small marketing and advertising company, but they actually received an offer to take the company private for $2.50. And right before that, they were trading for $1.30. So it's a significant premium, and investors are basically buying the stock in hopes that the deal gets accepted. But other than that, not really anything on this list that really catches my eye too much. Turning over now to the more important large caps, though, some popular names that had some big gains this week included the drive sharing company Lyft at over a 23% gain, famous rival to Uber. We also saw Coinbase rise by about the same amount too. That's actually the world's largest crypto exchange, and some people like to invest in it as a little bit of like an indirect play on crypto without having to speculate on individual coins. So you just instead, you own this like crypto exchange, and it's kind of a bet on cryptocurrencies just being used more in general into the future. But I don't personally own it myself. I only own a very small amount of cryptos like Bitcoin and Ethereum. But then we also saw Regeneron Pharmaceuticals. They rose by over 20% for the week. They're, of course, famous for being an effective treatment for the pepperoni. And they actually soared this week because of positive results for a different product in their in their pipeline. And it's for their eye disease drug trials. They received some positive news on those. And I actually used to track this stock myself because I always found them a bit interesting. And, of course, their sales and profits were soaring during the pandemic. But as we move past it, their revenue is now expected to fall by more than 25% this year, while their earnings per share are also expected to decline by over 20% on average over the next 5 years. And yet the stock is currently still trading near an all-time high, partly thanks to this week's rally. So it's definitely not a stock that I'm looking to buy myself anytime soon. But then other than that, we also saw the popular clothing retailer Lululemon rise by over 18%, which I'm not interested in owning any brick and mortar retailers, especially a premium clothing store like this one during such a horrible macroeconomy. I just think there's better options out there. And, especially because of the retail apocalypse, rise of online shopping, all that kind of stuff. But other than that, though, at the end of the list there, you'll notice Roblox. They had an 18% gain, and that's actually a super popular video game, especially among kids, that lets you create and play various games within it, and even from other users that created games themselves. It's a pretty innovative idea that has been soaring in popularity, with daily active users growing by millions every quarter before finally peaking a little this year. But they still don't have any profitability, and their price to sales ratio is pretty high at over 10, with revenue slowing down to just 3% growth this year coming off of the pandemic and with the weaker economy. So I still think there's much better options out there if you're looking for speculative stocks, but I do enjoy tracking it, regardless. Moving on now to the losers, though, it looks like China actually saw the biggest damage. They took the bulk of the damage this past week, with Chinese investment firm AMTD Digital being the worst performer and falling by over 45%. You also had Chinese electric car companies like XPeng and Li Auto fall by over 7% and 5% respectively, which are popular spec stocks to bet on, but I personally prefer Neo. I don't own it, but if I was gonna own one of these, I would prefer Neo because I just feel that they have a technological advantage, and I also love how aggressive they are at expanding not just their own business, but also internationally too into different markets and stuff. But then also on the list, you had Tencent Music fall by over 7%, which is a subsidiary to the giant Chinese tech company Tencent, who I happen to own myself, and I really believe in them long term, but I like owning the parent company Tencent, not this music spinoff. And if you're wondering why Chinese stocks perform so bad, well, it's really because of the lingering lockdowns across the country from their zero pepperoni policy that continues to put millions under lockdown and is heavily disrupting their economy. I do think that will eventually dissipate though, but for the time being, it's keeping down many Chinese stocks across the board. I've been using it as a buying opportunity though for some of my favorite Chinese stocks like Alibaba, for example, who is still down by over 70% from its highs. It's pretty crazy. And lastly, I'll just mention that I noticed McCormick there at the bottom. Some people like to own that stock for its stability and reliable profits. You guys probably know of them for their various condiments and spices like McCormick black pepper or French's mustard. But I think it's a super low growth and boring company with an equally unimpressive dividend of less than 2%. So it's definitely not a stock that I would ever consider buying myself, even on this week's dip, but some people do like to own it. But yeah, I think that just about does it for this week. Nothing too crazy going on, but I hope you enjoyed this little quick update from me. And if you want to know what stocks I'm invested in or hear my thoughts on other stock market related subjects, then make sure you're subscribed because I put out videos all the time on that type of stuff. But anyway, I hope you guys enjoyed the video. Hope you're all doing well, and I will catch you in the next one. Take care. Bye-bye.